So lastly, we will talk about financing activities. And financing activities is something to do with your non-current liabilities and your equity. So the first thing that you need to do is to look at your non-current liability and your equity. Okay. So the first liability that we have here is bank overdraft. Bank overdraft is a current liability. Okay. And later on, we will include our bank overdraft in our cash and cash equivalent because bank overdraft is a part of cash and cash equivalent. Okay. And next one is income tax payable. We have used this information just now. Okay. And income tax payable is a current liability, so we don't look at this stuff. Next, we will look at our bank loan. If you notice that your bank loan has increased from 0 to 14,000, that means we have received a bank loan of 14,000. Okay, so our cash will goes up by 14,000. Bank loan increased by 14,000. So there's a cash inflow over here. So we have received some cash from bank loan. So you need to record this in your financing activities. So in the first line, we have loan from bank, which is 14,000. Okay, so this is a cash inflow, so you need to have a positive figure over here. Okay, now we continue with share capital. So share capital here is an equity. So if there is any cash inflows from share capital, we need to record it in our investing activities. Okay, so our share capital has increased from 41,000 to 59,000. Okay, that means there is a share issuance. Okay, and based on additional information C, okay, cash was raised from a share issue in November 2018, and the share issue cost is 1,000. Okay, so in order to find how much money we receive from the public, we need to find the differences between the share capital, okay, which is 59,000 minus 41,000, and then we need to add back 1,000. Okay, this is because, okay, the increase in share capital already include the share issue cost. We need to split the share issue cost. Okay, that means we cannot include share issue cost in the proceeds from additional share capital. So the thing we need to do is we need to get the differences between the two opening balance and closing balance of share capital, which is 59,000 minus 41,000, and not to forget to add back that 1,000, because the differences between the share capital already include the share issue cost. I need to exclude the share issue cost, so I need to add back that 1,000 worth of share issue cost. Okay, so 59,000 minus 41,000 plus 1,000, you will get 19,000. Okay, if I raise fund from share capital, so there will be a cash inflow, so this figure over here is a positive figure. So next we will record the share issue cost. The share issue cost has to be recorded separately from the proceeds from share issuance. Okay, so you will have a share issue cost. Okay, this is a cash outflow because I pay for the share issue cost. So my share issue cost is 1,000, so this will be a negative 1,000. Okay, now we move on to retained earnings. Okay, normally we will pay our dividends from retained earnings. Okay, so the changes in retained earnings doesn't show much on how much dividends we are paying. So we need to look at the additional information. If you look at additional information donkey, they already mentioned that 21,000 dividend was paid to shareholders. So I want to highlight 21,000 dividends was paid. That means there's a cash outflow. Okay, there's a cash outflow over here. So under financing activities, we would have dividends paid. Okay, and this dividend paid is 21,000. Okay, this information, this 21,000 is from your additional information D. So once you are done, you do the same thing. You sum everything up. You sum everything in your financing activities. Okay, so 14,000 plus 19,000 minus 1,000 minus 21,000. So dividends paid is a cash outflow, so you need to minus 21,000. So 14 plus 19 minus 1 minus 21, you will get 11,000. Okay, so now you have the total figure for your operating activities, you have all the net cash flow from your investing activities and your financing activities. The next step that you need to do is to add and minus all this figure. So 13,000 minus 32,000 plus 11,000 equals to negative 8,000. That means the cash will reduce by 8,000 during that year. So the net cash decrease, okay, so this is a decrease in cash held, okay, so this you need to write net decrease in cash is 8,000. That means overall there is a decrease in cash by 8,000. Okay, you need to sum everything and then you put it over here, so you find out that you will have a net decrease in cash, and in order to prove that, you need to have the cash and cash equivalent at the start of the period and the cash and cash equivalent at the end of the period. And you need to compare these two figures to see whether you have a net decrease in cash of 8,000 or not. Okay, so for cash and cash equivalent, these are the things that you need to know. Cash and cash equivalent, okay, equals to cash at bank and in hand plus short-term investment that matures within 90 days minus bank overdraft. Okay, it depends on each question. Sometimes we don't have short-term investment, so we just ignore it. Sometimes we don't have bank overdraft, so we just ignore it. Okay, so cash and cash equivalent equals to cash at bank and cash in hand, short-term investment that matures within 90 days, and then you need to minus off your bank overdraft. Okay, now for cash and cash equivalent at the start of the period, you need to look at the opening balance. Okay, so if you look at the opening balance, you have 7,000, okay, for cash at bank, and then there's no cash in hand and there's no short-term investment that matures within 90 days, and at the same time there's no bank overdraft, so you only record this 7,000. Okay, so under cash and cash equivalent at the start of the period, which is the opening balance, you have an opening balance of 7,000. Okay, so for cash and cash equivalent at the end of the period, okay, I need to look at the closing balance. Okay, so the closing balance is over here, 30th June 2019. So everything here is your closing balance. Okay, so if you look at your closing balance, there's no opening balance. There's no cash at bank, but there is bank overdraft of 1,000. So 0 minus 1,000 equals negative 1,000. So you will have a negative 1,000. Okay, you will have negative 1,000 under your cash and cash equivalent at the end of the period. So in order to check your answers, you need to make sure that your cash and cash equivalent at the end of the period minus your cash and cash equivalent at the start of the period equals to the net decrease in cash. So how do we do this? So your closing balance minus your opening balance equals the net changes in cash. So your closing balance equals to negative 1,000. So negative 1,000 minus your opening balance, which is 7,000, minus 7,000 equals to negative 8,000. Okay, so this negative 8,000 is the same as the net decrease in cash that we have here. Okay, so this proves that our calculation is actually correct. Okay, so this is how we check whether the statements that we have done is correct or not. Okay, this is how we double check. So normally we won't write this out. This is something that I write, okay, for your understanding. So you don't need to write this in your workings actually. Okay, it's for your own reference only. Okay, if you want to write it out, it's okay, but please write this in your workings lah.